Let's explore a couple of these indexes, and let's start with Japan. The Japanese economy grew at 3.5% pace in the first quarter of 2013. And that's thanks to initiatives of the new government led by Shinzo Abe.
Correct. So now, I mean, Japan has been like the sick man of the world for many decades. We all know that the Nikkei was at an all-time high, I don't know, like 2 decades or something ago. But in the last year, as you can see from this chart behind us, it's really gone ballistic in an upwards direction. And it's because Shinzo Abe, won the election. He was a previous prime minister, but he came to power on the basis that he was going to press ahead with some aggressive stimulus measures. And that certainly has, G'd them into some kind of action. The yen has weakened substantially, which is good for their exporters. Remember, the Nikkei is dominated by some of these big global players like Toyota and others that benefit significantly from the weaker yen. So far so good. And if you were in this index trade in recent months, look how well you would have done.
Yeah, have you seen a lot of people deploying money into this index?
Not personally as such, but clearly there's money going into it, and it may well be 2 shifts. One, foreigners coming in to try and do it. Of course, it gets neutralized by the weaker yen. But internally, Japanese might well be shifting money, enormous amounts sitting in the bond market, which is really yielding very little, and shifting to the actual Nikkei. The Nikkei has been in a bear market since 1989.
Let's just say that again, 1989, a bear market out of Japan.
It's what you call a secular bear market. In other words, you've had ups and downs in that time, but new lows getting formed, etc. And 2008 saw another new low. This market now, since when we say it's been up in the last year, it's actually only been up in the last 6 months, right, when it actually took off, and that's when the market started anticipating Abe's election, and then the reality of the election, it's just continued to go up.
But surely, I mean, Chris, you're the cautious economist, voice of reason out there, and I mean, they are doing quantitative easing on steroids over there. We know that most of their debt is owned by Japanese citizens, but they are really, borrowing from future generations, putting the electric, sort of trodes on the sick patient and giving him one hell of a heartbeat jump. But is this going to end well?
That's correct. I don't believe it'll end well, but it may end. It may end in a surprising way, in the sense that quantitative easing stabilizes the shorter term at a longer term cost. And when you escalate your quantitative easing, that longer term timeline starts to get shorter. And that longer term cost is in fact the escalating debt. So debt is
But is the longer term cost worth it? That's what I suppose.
Probably not.
In Japan, they sell more adult diapers than diapers for babies. So there is no future generation in Japan. The population is declining.
They're not making enough Japanese anymore, and that's certainly the case. And the point is that we know that there's an accident going to happen. But in all of these cases, what gets left standing and what gets hit? And you sometimes don't know. For instance, is it going to be a massive inflation or is it going to be a massive deflation? Because ultimately the debt will either be deflated away or it will be inflated
While
away.
the broader economy is deciding, the stock market is going to benefit from that flood of money. That's what's happening here.
Well, the point is if you start to see that it's going to be a deflation or the debts are going to implode in some way because the Japanese government somehow, or whatever, you may well find the billions mobilize into the stock market and actually say that's their protective mechanism against a thing. And that means your bonds will do badly, but equities could do well. You could find a situation where everything does badly. The best is just to be out of Japan. But at the moment, it looks like
it's good to be in Japan.
The equities may well continue moving.
Yeah, I must say I'm not negative about it even at these levels because the prior levels were much higher. And secondly, Toyota we've mentioned. So Toyota, fantastic company, benefiting enormously. Yes, they've got problems because the Chinese hate them and that's become a bigger issue in recent years. So they've got to sell the Toyotas to someone else. They've got export-driven companies, the guys that make soy sauce, I can't remember the name of the company, all those trading houses. You know, Japan is an enormous economy, largely insular, but they import a lot of physical materials. So those big trading companies.
So you say it's going to go higher from these levels?
Well, I mean, I don't know. But I mean, remember, you don't have the yen-dollar disadvantage you mentioned earlier,
Yes.
because what you buy here when you buy this
Yes.
index is just the index.
Yes.
So that's great. That's actually a longer-term chart. You can really see how that thing gets cracking on in 2013.
Yeah.
Look, I'm a little bit skeptical because I think this one really is on a bit of a wish and a promise.
Do you concur with Paul on a wish and a promise?
There is a large scale, but when you look at all your markets, whether it's the US, the German, etc., you're finding a tendency where the fundamentals are actually dislocating. It's not a long way yet, but you are seeing the underlying fundamentals, like earnings, for instance, turning down while the markets are shooting up. And this is, now, Japan is QE on steroids, but you've still got it in the US and Europe, etc., you know, in various guises. And so you've got, generally in the world, what I call liquidity-driven momentum markets rather than fundamentally driven markets. And so you can say, well, is this the equivalent?
Well, this is the yen rand now.
This is the yen. It's being there. But the point is...
Even weaker than the rand, can you believe it?
Yeah, it's weaker than the rand. Okay.
Is that possible?
So, yeah, in the currency wars, you know, the yen is winning, you know, coming, you know.
So
beating the
let's,
second.
gentlemen, go
Yeah.
to hot or not on the Nikkei.
Look, I'm not hot on it. I think it's just a little bit too soon, too fast, too easy.
Chris,
Yeah,
hot or not?
I'd look for pullback to make it hot, yeah. But otherwise, I rate it hot because of just the sheer efforts that they're making.